So I finally got my money onto the GDAX exchange, which is a subsidiary of Coinbase. You can transact, purchase, sell 4 coins here, namely Bitcoin, Bitcoin Cash, Ether, Ethereum, and Litecoin. And I'm currently studying the market, watching its downside, which is kind of going to come. So we've moved over to the world charts and looking at the cash. They've all pretty much gone up, although Ethereum hasn't gone up so much, and there should be a bloodletting at some point. Now, how to trade? That's the question. How to trade? Well, the smartest way to trade is to trade relatively one coin relative to another, and I've put some data up on a chart here to enable me to do that. So a while back I put the value, the current value of the stocks file. So here we have Bitcoin, here Ethereum, here Ethereum Cash, and here Lit, and I transform these to a 500 base. So you multiply or divide them by whatever number it is to get them all to the same number, which is 500. And then I decide to bring them down to a base of 100. So this is the factor here that can be varied, which will transform all of these to 100 base. And then the data is put in. From there, whatever this comes out to be, in the case of Ethereum, it's the value of the last price on Ethereum divided by its factor, which converts it to 500 or 1,000 or 100 as the case may be. Now, at any point in time, this number here is changed such that it gives us the lowest number here. For instance, let's just do that. Let's put it this to 5.1. So Ethereum is the 100.36. So put that to 5.1, and it changes that. Goes down. So we can change all these relative to one another by changing this number here, which is a manipulating scalar. Once that has been changed to 100, or the lowest one is set on 100, then it's transformed over into this little chart here, which currently, relative to the beginning, Ethereum is still the lowest. And that's shown on this chart here, where we just do a normal print out on a spreadsheet. So the smart way to trade is as follows. I haven't bought anything yet, but they all started off on a baseline here where Lit, Cash, and Ethereum were essentially the same on a relative basis, and Coinbase was slightly higher. So we just wait until one of them comes below Ethereum to guarantee that there is a lower buy-in point. Now, it doesn't matter whether the stock's going up or going down or going sideways, whatever. If one of them transposes itself out of alignment with the rest and comes down, then you can transpose and buy it at some point. So let's say, for instance, the overbought Cash comes down below Ethereum, then one can change from Ethereum to Cash. Just sell Ethereum, buy Cash. Then we set Cash as the baseline for which we have it as the local base of 100. And we'll see all the others above it. When something comes below Cash, then you can sell the one you've got. You can sell the Cash and buy the one that's come below it. Now, that doesn't matter whether the market's going up or coming down. These indices will get bought out relative to one another, and sometimes they'll be overbought, sometimes they'll be oversold. You hold the one that is going to be the lowest at all times within reasonability of buying and selling. If one of them comes down below it and there's a stable enough market, then you sell that, buy the other one, and that's the premise of sensible trading. It doesn't matter where you are, up, down, left or right, you can always buy into the lowest one and gain. So that's the premise of how things are going forward. And we're just monitoring the market to see if and when something comes down. And when it does come below Ethereum, I shall buy in. That's it. Hope you find that useful, and I'm out of here.